What is going on, everyone? I am back, and today we are going over a trade recap of the trade I took today to pass 2 evals. Here is the proof that I passed the evals. It's not very important until we get the payout, but it is my first time using alpha futures, and I really do enjoy it. I did have 3 accounts, and I blew one. I traded CPI. I will show the actual live trading session sped up, and then we'll go over my strategy. Today we had a extremely mixed bias, so I was really honestly just reacting to what the market gave me, and I was really just waiting to see whichever setup formed first, and I'd target those liquidity. So you can see we had a 1 hour fair value gap here, then we had a 15-minute fair value gap in the same area. So I needed price to retrace to this 15-minute fair value gap because that was the only fair value gap in the 1 hour. So that's my target key level. And I was low key a little skeptical when I first got into the trade because I didn't think it was that good of a key level, especially with the higher time frame pressure we had, if you would say so. Price reached this 15-minute fair value gap inside the higher time frame key level or the higher time frame confluence, the 1 hour fair value gap, and we're just looking for an entry model showing bullish pressure. We have an order block. Why? Because liquidity was swept. Then we had a displacement candle, so this becomes an order block. Then next thing you know, we also see is we have a market structure shift. So that's 2 confluences right there. And then a third one, we had a inverse fair value gap. So that's more than enough to enter, and I could have entered, but I wanted to see a little more of a push up. I wanted to wait for a fair value gap to determine fully bullish pressure, and we were targeting 1-to-1s pretty much. Set up our Fibonacci retracement, and oh my gosh, it actually worked for the first time in freaking forever. And I only got 1 position. So price tapped me in, stop loss, blah blah, and we targeted not only a 1-to-1 for this position, the inverse fair value gap entry, but we also targeted for the first take profit and break even all these equal highs right here. So once I saw that price reach those levels, I brought myself to break even, and then I actually took myself out because I didn't need it. I passed my account. So we're going over B Daddy's model. First up is daily bias. This is very controversial among the trading community. Some people say it's not important. Like today. Today's a perfect example of why it wasn't important. I didn't use the daily bias. I more so went and reacted off price. It can help you create a narrative for the day. So that is why it's step 1. Second step is find your key levels. This is higher time frames like 4 hour and 1 hour and daily. And then you also need to find your lower time frame key levels like your 30, 15, and 5 minute. These are all determining areas where you should start looking into your trades or where you can target. Step 3 is wait for price to enter both areas, and this is very important. Lower time frame confluences are not very much without higher time frame confirmation, and higher time frame confirmation is just a big gap or a big level with a whole bunch of narrative that hasn't been solved without your lower time frame confluences and key levels. So that's why you need both, and that's why I wait for both. Yesterday's trade was a perfect example. I could pop it up on price kind of showing a fake out with some bad price action, pushing up to a lower time frame key level inside a higher time frame key level, where I took a trade and made a banger and actually called the dump. Step 4 is start looking for your entry model. Emphasize your, because I need you guys not to copy me, not to copy whatever favorite traders you like. I need you guys to know I need you guys to have the experience to know which confluences work best with your entry model. So me, I need at least 3 confluences. Now, I've been called a pattern trader. I don't care. I still have to react to the market like it did yesterday. Um, and I also need certain confluences. If you think about it, everyone's kind of a pattern trader because the strategy needs to be the same. So technically, that is pattern, but whatever. And liquidity on lower time frame does not count as a confluence because it's so overused, I guess you would say, and it's not very that strong of a confirmation, if you'd ask me. Number 5 is have the balls to enter. It's extremely important for you to be confident in yourself. I need you to backtest and forward test on paper as much as possible so you are confident to enter in a trade. I get having the money risk is scary. You need to let that. You need to let it go. Really, it's just holding you back pretty much. So have the balls to enter. The 6th step is have lower time frame key levels for your take profit and stop loss. Now, I always put my stop loss below the recent lows or the recent highs, whatever direction I'm going, obviously. But your take profit, I see a lot of people struggle with this because they want to get the biggest trade ever. That is greed, brother, and you need to control it. When you're at all-time highs, pushing up, and you want to sweep Asian lows, 250 points down, what are the chances that's actually happening? You guys have to realistic take profits, and not saying that it won't reach there, but it's not going to be very likely. Like, you can have a runner going. I could have had a runner going yesterday and secured like $4,000, but I didn't because I just wanted to take out my trade and not micromanage. But anyway, it's having the right narrative and targeting specific key levels, especially on the lower time frames, because the more you do that, the more you'll realize how much those are respected, and you'll be like, oh my gosh, the reason why liquidity wasn't taken and I've been missing all my take profits is because there's a unfilled 15-minute fair value gap in front of it all the time, and price actually reaches that all the time, and you'll learn to realize how strong lower or like 15, 5, 30-minute unfilled fair value gaps are. Those tend to get retraced to a lot of times. Those are great areas to target. That's what I did today. That's what I did yesterday. That's what I do on most of my days. And my last step is limit your trades. Only a certain amount of opportunities are going to show up in a single day. So you need to limit your trades. You take a win, shut your laptop, dude. That's how greedy habits are built, and that's how you tend to lose more money than make. And then also, once you take 1 to 2 losses, dude, shut the laptop. You don't need to trade anymore. I get that you want to make that money back, but you always have tomorrow. I appreciate you guys. I love you guys. There is a free Discord down in the link below. If you guys like these types of videos, please let me know, because I have no idea if anyone actually finds some informational or not. But have a blessed day. I love you guys. Stay safe. God bless. Peace.